All right, guys, ready to get back to work tonight? It's that time of day again here, after all. We got to get ready for Friday, not just any Friday. Get ready for OPEX Friday coming right around the corner. It's Thursday evening, after all. It is January the 14th, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it is so great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. Not just any Friday, third Friday of the month. OPEX Friday trading session. Got a great video in store for you guys and gals tonight. S&P is ready. Crude is ready. And, of course, we got the gold ready for tomorrow. Boy, where do I begin tonight? Still dealing with some ranges. Got a bunch of pendulum swings. We got some pretty strong moves, though, right? Strong moves on the S&P, strong moves on the oil, and well, it looks like gold might be looking forward to possibly a breakout tomorrow. We get that Biden COVID plan coming out here in just a few moments. So, lot to cover tonight on the video. I want to make sure you're ready for Friday's trading session. Before we jump in, though, and get started, don't forget to subscribe to our YouTube channel. You know, we publish this video newsletter every evening, Monday through Thursday, with my best trade ideas, my best setups for the following day. So make sure you subscribe to our YouTube channel so you always get all the good stuff. Hit that little bell icon so you always get notified every time I publish this lesson every evening. Don't forget, too, if you have any questions, drop those questions for me in the comment section below. I'll get them answered as soon as I'm finished up tonight. And, you know, I always appreciate you guys tuning in every evening. I always appreciate you supporting this channel. If you enjoy this video as much as I enjoy making it for you guys every evening on this newsletter, always appreciate that thumbs up button for me here on this video newsletter. So make sure you subscribe. In the meantime, though, let's get to work tonight, shall we? Charts are ready. News is ready. I'm glad to see you are ready right along with me. Let's take a look here at the charts. Now, you'll notice we're still battling through a lot of ranges right now. Range on the E-mini, range on the oil, range on the gold, right? So lots of ranges. We're looking to short the pops. We're looking to buy the drops. And we're going to focus on failure patterns, right, around key levels of support and resistance. Now, looking at the left to right here, of course, the S&P was way, way up, right, above the highs of the range. We talked about shorting the pops last night. I got a couple comments saying, who on earth would sell this market right now? And I thought, have you looked at the chart? Have you looked at the chart yet? Well, here we are, right? Came all the way back down again. So shorten the pops. Strategy worked great today on the S&P. Now we've got the bears well in control, and the bears are riding that momentum. I'll tell you, I'd love to see a couple pops to sell into tomorrow, right? Would love to get short either on a pop into the S&P or riding momentum. Got a big target down around 37.68 here. Got a couple really interesting setups I'm looking for on the S&P, so you'll want to make sure you stick around for that tonight. How about that oil? Big run higher, as you can see on the oil. Now, the hard part about the oil right now is we're definitely bullish. There is no doubt about that. But that range down here, it's acted as a magnet. And, you know, the major top is up at 53 and change, almost $54 a barrel. The risk reward up here, is not that great. There's not a lot of profit left overall here, and a lot of risk going back into that range. So I don't really like the idea of the buy side. I'd like to short this market going into these highs here for tomorrow with a big magnet down at that $53 a barrel. I'm not completely against getting long on the oil. Again, we got some big news coming out tomorrow, we'll talk about in a second. And we might get some good setups on the buy side, but there's a couple things I'm looking for before I start getting long on the oil tomorrow. So make sure you stay tuned tonight in the video. We'll talk about that as well. And how about that gold? Now, gold is probably the biggest wild card as we go into OPEX Friday. Not only is OPEX Friday, Options Expiration Friday, one of the more choppier days for gold, but as I mentioned in last night's newsletter, we've been waiting all day to hear about this new relief package for new President-elect Biden here in the U.S. It sounds like the transcript just got released a few minutes ago. So, you know, right now it's almost 5:30 Eastern time. So, you know, half an hour from now when these markets open up, we might might be in store for a breakout here on the gold. So it's a range-bound market right now on the gold, which means we're trying to buy low, we're trying to sell high with failure patterns. I really like this trend line. Now, this trend line can be your best friend or your worst enemy as we go into tomorrow's trading session. So tonight we're going to talk about how that trend line can help me for the buy side and the sell side, because I think you're going to be able to find some pretty good setups off that trend line. And of course, with this relief package, right, supposedly $2 trillion relief package, it's hard to imagine we're not going to see a rally on gold. It's hard to imagine we're not going to get some sort of breakout on gold tomorrow. So I want to make sure you guys are ready for the breakouts as we go into Friday's trading session. Speaking of Friday, before we jump in to get these charts going here tonight, I just want to make sure we double check so you know when the news is tomorrow. Now, again, it may not seem like an OPEX Friday, but tomorrow is OPEX Friday. The first day of the year, right, was a Friday. So we've got, of course, 1, 2, and of course, this is the third Friday of the month. So options are expiring not on the January, right? But I'm sorry, on the January contract, and of course, options traders looking for February. Now, what does that mean for us as futures traders? Well, options expiration is known as a lot of volume coming to the market, but not a lot of movement. And if I was to kind of illustrate what OPEX usually kind of feels like, it feels like this, right? It feels like this, where the market is, again, there's a lot of volume coming in, and there are some pokes, up and down, right? But usually with OPEX, though, you're going to see not a lot of movement, right? Because traders are kind of positioning themselves ahead of options expiration. And so we do anticipate some grindy, consolidated markets, and it goes right along with what we have coming in for the ranges we've seen this week, right? So now, like I said earlier, we got some big news tomorrow. We get the PPI number. We get the retail sales tomorrow at 8:30 Eastern time. So even though we expect to see a little bit of a grindy OPEX session tomorrow, again, OPEX, a lot of volume, not a lot of movement as traders are positioning their portfolios into the end of the day. But hey, who knows, right? Maybe the PPI number, the retail sales number, maybe that will break things out tomorrow here for us. We don't really have a lot of other news to worry about other than that PPI and retail sales tomorrow. Get the 8:30 Empire State. None of these are really looking like any market-moving events. The biggest ones, anytime we got PPI, CPI, right? Anytime we had that stuff, we know we're going to pay attention to those news reports. So don't forget, 8:30 Eastern time, that'll be our big news of the day tomorrow. That's the scheduled news. Now, obviously, again, we've got this big, potentially grenade going off here in the kind of the aftermarket with the COVID relief plan coming out here, potentially being released in the overnight here. So that is one of the big variables. We'll see how this goes as we go overnight. And of course, we'll update our charts tomorrow before we get back after it on a Friday trading session. One thing you do want to remember is, obviously, the news at 8:30, Friday mornings, early in, early out, you really got to have a good reason to be trading after 11 o'clock on a Friday morning, especially on an OPEX Friday. So just remember to keep your eye on the time and get there early, right? Tomorrow is not a day to start late, right? You want to start early, get whatever action happens overnight, get the charts all prepped up, and then follow the plan we'll outline here right on this video newsletter. And of course, don't forget, every morning we get together in our trade room at 8 o'clock Eastern time, and we trade all this stuff together, right? So put the plan together tonight, but be aware, big news tomorrow, 8:30 Eastern time. That's the scheduled news, right? We'll see, of course, how much this COVID plan tonight, how much this shakes things up in the overnight, and we may have to be light on our feet tomorrow in the trade room. So S&P's ready, oil is ready, gold is ready. Let's jump into the S&P here first. Now, of course, we've been talking about this range all week, right? This has been a grindy start to the new year. There's a new president in the United States. We got the pandemic still ripping through the world right now. So, stimulus packages and changing of the guard. So it's not totally surprising to see markets that are range bound right now. To kind of bring you up to speed right here from last night's newsletter, we were rotating in last night. We had that nice big bull run here, and of course we wanted to short back into the range, right? The goal was to get short back down into that range in last night's newsletter, and we talked about these nesteds, these ones, these twos. And I'll tell you, whether you got to it early, whether you got to it late today, right? If you were trading the overnight, the 1-2, right? There was a couple early shots, right, to get short. There was a couple late shots to get short. So, it didn't really matter when you got to your desk today. If you knew the pattern we talked about last night, you were ready to go for today. So now we're back pretty much inside that range right now. The Bears have all of the momentum behind them. And as we've talked about all week, we've got that pendulum swing. Boy, I'll tell you, I hope by now that I've convinced you the importance of these pendulum swings, right? I mean, the pendulum, I don't have them all kept to date here this week, but we have been seeing pendulum. They make for such great turning points in these range-bound markets. So the bottom line is we have a good idea of where the market wants to go for tomorrow, right? The Bears will probably be eyeing that 37.72, let's say, down there. And of course, you got that big low, 37.68 and change down there, right? So really easy to assume if I'm short right now, right, that is definitely where I would anticipate those sellers are looking for their targets. So knowing that, the only real big problem we have right now, we know direction's relatively straightforward. We can see the Bears have control right now. You probably don't need my help to see that. So the hardest part is just simply staying out of the range, right? I don't want to trade inside this range. So, I talked about shorting the pops last night, and that's exactly what the sellers are trying to do. They've got all of that momentum. The Bears will be trying to short the pops here into levels of resistance coming down overhead. And then if we do run lower, our biggest hurdle, of course, if we do make that move lower, will be to make sure we're not chasing after it and selling too low. So, really at this point, it's continuation moves going lower. It's shortened the pops here for the Bears. Now, this is really setting up to be a nice opportunity here to get short on these at the battle zone I have overhead. And so there's kind of two scenarios I'm watching for on the pullback right now. If you want to be a seller, the first one would be if I can get up and into kind of where this little trend line, the top of that channel collides up there, right? That's kind of the ideal spot. I'd like to get up inside that area. I'd like to get these buyers coming over, trying to get long, right? Trying to go back up for that retest. Once we see those buyers committing to it, now we can look for what I always tell my clients, right? Anticipate, put yourself in the shoes of the buyers. If you were a buyer buying that pullback, where would the stop be? It'd be right below that low, right? So selling into stop losses. And if we can do it above the range, selling with a pullback pattern, right? So it's basically a buyer failure where we're basically, again, selling into the stops of those buyers into a bear pullback pattern on the way back down again. A failure into a pullback combination. Now, you may have noticed we had a range today, right, on the faster time frames. That range overhead, that range is going to act like a magnet. The reason why I bring this up is because if the market, for example, let's say we rip higher here, right, and we go all the way back up into that trading range, we get above this trend line, right? Can I still short that? I definitely think we can, especially since we still have that big bear move down. The problem is going to be, though, is momentum. So as the market goes higher here, we're going to have to wait for these buyers to try once, right? Try twice, and then we'll be able to short this thing back down. So think about that, right, on the pullback, right? A relatively shallow pullback. Again, I'd like to get at least up above that 38.5 area. Get above that 38.5. Get those buyers coming in. Get them to get long. That'll be a straight failure into pullback combination setup. Or do we really spike up, right? Really spike up here. And if that happens, momentum's a problem. Let them try once. Let them try twice. And then I can sell back down again, right? Once we have those bears come in twice now, Because that will probably be like a channel over here. You'll want to make sure you really find where those bears are trying to get in. And then once you've got them locked in, you know exactly where to hit them, where it hurts, right? We can sell right into those stop losses and ride that momentum back down. If I can get short off these highs, target 1 is back to the low of that range. Target 2, because it's a Friday, it's one of those days, it could really run. I mean, it could really run. Fridays are one of those days where sometimes the markets will go up and they'll just keep on grinding until the close. So definitely a Friday afternoon is a time to kind of get rid of the final target and just see how far it'll go off of that high. Now, you might be wondering here, right, how do we get long if this market goes higher here right now? If the market jumps higher, what we have to do is we've got no proof for the buyers, right? The buyers have nothing going for them right now, right? They failed up here, they failed here. There's nothing going on for the buyers right now. So the buyers have to show us some proof, and they have to jump off that moving average. If I can get what I call a 1, 2, 3 reversal, then I've got the buyers back in control. Now, once we get the buyers back in control, I then like to look for those hidden channels. Mark off the high, mark off the low, and I like to look for pullbacks off the low of that channel. Now, I don't want to waste too much of your time tonight, but if you were to zoom in on that area, right? If you were going to zoom in on that area here for real quick, right? If you were to zoom in that area, that is usually going to be what we call a failure into a pullback. They're very simple patterns into a pullback combination, right? So look for that entry pattern, right? That failure into pullback combination up around, again, if we can get that 1, 2, 3 breakout or 1, 2, 3 reversal, look, that first test is the best test. And guys, those combination setups, those failure into pullback combinations, I always look for them around those channels. And if you want to learn more about those failure into pullback combinations, I would definitely recommend you take our free trading course. It's linked up in the upper right hand corner here. I'll put a little pop-up there for you in the upper right hand corner. Grab that little button that popped up and register for our free course on our website, because I want you and I to have the best possible experience every evening on this video newsletter. And the next time I say a failure into pullback combination, if you've taken my free course, you'll know exactly what I'm talking about. I'll also send you hundreds of examples of how we apply those setups to our favorite futures markets. So if you're serious about your trading career, if you want to get the most out of this nightly newsletter, or if you just want to find out how I really trade these patterns, right? Grab that link that popped up there in the upper right hand corner. Now remember, we want to stay out of the middle, right? So if we go sideways here, which is very possible as we go into OPEX Friday tomorrow, we may end up just going sideways. What's the plan? Well, the bears have control, so we're shorting the pops, right? We're shorting the pops. So if we continue going sideways here, what are we going to do? We're going to wait for those jumps up. We're going to try to get those buyers roped in around the moving average. We're going to plot our entries to sell right into those stops using those 2 try failure patterns, right? And again, if the market really pushes, then we wait for the 1, the 2, right? It's the same idea. It's just a little bit more patient entry because of the momentum, okay? So stay away from the middle of that trading range. Now, we also know we've got a lot of momentum, right, coming lower here. So what if the market was to run lower here, right? What do we do then? What do we do, right, if the market keeps on running lower? Let me get rid of that channel here real quickly. Let's say, for example, the market keeps on running lower. One of my favorite patterns when I find myself a little bit too low, you know what I mean? If we get a big push lower here in the overnight, one of my favorite patterns is called a trap pattern. And what you want to think about is if we do keep going lower, my main priority would be looking for traps right above those highs. So again, sellers are likely going to want to ride this momentum lower, but I don't want to chase this thing down here. That's the problem, right? Just like you don't want to buy up here, you don't want to be selling down there. It's the same idea, right? Just the opposite side of the range. So what you want to be thinking is think about how can I get above a prior swing And you know me, I love channels, right? So I'll be drawing channels right off of these highs or off the lows and be looking for the trap along with that channel, right? So that is some definite action we're looking for here tomorrow. There is also potential that at some point tomorrow we might get a break out of this range where it breaks down and goes sideways down here. Right? Sometimes what will happen is towards the end of the week, the market kind of gets exhausted. Like I said, we might get some news that may bring this thing all the way down. If we start going sideways down here, it's the same idea as if the market went sideways here. Right? What was the plan here? Short the pops, right? With those 2-try failure patterns. So if we end up down here overnight and we're just hanging out down here, right, for a few hours in the Asian session, we open up tomorrow morning, we get that pop up. All I'm doing here now is waiting for those buyers to get in trouble and shorten back down again, right? Let gravity, right, take over, okay? So we're not just going to buy the low if it goes sideways. Now, how could I buy the low down here? Is it possible to buy the low? Absolutely. But first, we got to take these lows out. So if I want to be a buyer down here, I've got to get these lows taken out. And then think about the pattern we talked about in last night's newsletter, right? That buyers try once, buyers try twice, right? And what was that called again? The trap high to it, right? I call them crown reversal patterns. So as the market's going lower here, all of that momentum is so strong. I'm at a turning point, so it's a decent spot to look for a reversal, but I got to wait for the bears. Give me once. Bears, give me twice. And because of all that momentum, you really want to make sure you get either a trap low or a hidden channel low, right? You want to make sure you get some really solid area of support there. And again, you want to give those bears the benefit of the doubt, right? To give them at least 2 tries there, right, as we go lower. Now remember, as I always say, there's lots of variations of that pattern. So sometimes it'll kind of V bottom and run back higher. In those situations, we're not going to draw the trend line and try to buy like that, right? Because you're buying way too high. What you want to do in that situation is skip the trend line, look for a trap low, right, and get in from there. All right, and there's actually a couple of examples of this that we'll see here. I believe it's in the gold later on tonight on this video. All right, guys. So now I think we're ready to go here for tomorrow, right? So we know what we're looking for as the market rolls lower. We know how to trade right in the middle, and we're going to keep on shorting those pops right here on the E-mini. Let's take a look at the oil. Going over to the oil here right now. Now there's a range again right here on oil, right? Go back here. We can see the range we've been looking at pretty much all week. What's the most key takeaway right now? The bulls, of course, have this very strong, right, momentum push. The bulls are rotating off the low, right? We had the rotation off the high. You'll notice the amount of the move off the high was not even, well, it was close, but they definitely missed their pendulum swing. That is considered to be a major failure for the sellers, and you can definitely see the buyers made them pay, right? That is for sure. It's tough to tell exactly why this thing ripped higher like this. It could be a little bit of this COVID relief bill coming out, right? You know, the rumor would be, or the theory would be, release all the vaccine doses, everybody goes back to regular life. You know, this is, you know, obviously in theory, and everyone starts flying again and traveling again, and, you know, manufacturing's back on again, and this demand for oil, right? I would assume that is what the markets are seeing. Whatever the reason is, it was kind of a bit of a surprise there, but we have a bull market, right? Very strong bull run, and we are rotating off the high of that range. Where do we think the buyers want to go, right? The buyers, if we understand how ranges work, and we understand the amount of the move below the range is oftentimes the amount of the move above the range, and we know this range is a magnet, right? It's a balanced magnet area. That creates a great level of resistance. You can see they pretty much are sitting right at that area of resistance right now. That's a big clue. Where could they be trying to go higher from there? Absolutely up to retest those highs at 93. So this whole area, really, this whole area up here is really just pegged as one big area of resistance. Okay, so what do we do at resistance above a trading range? We look to get short. Now, what's the challenge I'm running into right now? The challenge is we're very bullish. So when I want to get short, and I know there's a lot of bull momentum on the chart, I have to anticipate now that, well, buyers are probably not going to go without a fight, right? They might V-top up here. The markets have been, relatively whippy like that lately. So there's a chance the market may V-top like this. But this is where you got to put yourself in the shoes of the buyers here. Real quick, let me get rid of that, get rid of that, get rid of that. Put yourself in the shoes of the buyers. If I wanted to buy this market, if I didn't think it was a range, right, which I do think it is a range, I would probably draw a trend line off these highs. I'd bring it down to that low. And I would look for like a trap, right? That's what I'd be doing, right? I don't want to buy I don't want to buy into the highs here. So if I was in the mood to get long here, I'd be looking for traps. You know what I mean? Just because I wouldn't want to buy into these highs. So I can definitely anticipate where buyers would probably be looking to get long. And you're more than welcome to give it a swing up there. I'll talk about what I would use to get long up here in a second. But the core kind of principle of this is we know we're bullish. We're right into an area of resistance. Try to anticipate now. If I was a buyer, what would be going through my mind? It would be, well, I'm worried about buying high. I want to buy low, and because we're towards the end of this potential range move here, I want to look for traps, right? So major resistance overhead really kills the risk-reward ratio. There's not a lot of reward for the amount of risk we got to take here because the range acts right as a magnet. The problem is the sellers can't get too aggressive up here to get short because you got those bulls in control, right? And of course, buyers, they've really got themselves in a pickle up here because there's not much space to trade with. Now, how do we get short off the highs here? We talked about this last night on the newsletter, right? Shorten the pops. So price jumps up. What are we expecting? We were anticipating, right, a channel low. What I'd love to get is these buyers trying once, get these buyers trying twice, right? I always like to either get like a trend line off that low, up around that high, right? Trend line, resistance, overhead, trap high, resistance, overhead. That would be one of my favorite shots for tomorrow. And again, you can see all I'm doing here is I'm respecting the bulls, right? But I'm at the same time anticipating if I was a buyer, where would I be looking to get long? And once I see them start to fail, watch out below. That magnet, right, will likely take over. Now, that would also go too if the market keeps on pushing, right? So even if we take out these highs up here, which is very likely it seems, right? Even if the market does take these highs out here, okay, as we pull back, I would expect buyers to come in once, buyers to come in twice, right? Can I get a trap off the high for a crown reversal? That would be incredible, right? Or do we draw trend lines off that? Trend lines there, sell off the top of that channel. The only thing that's going to be a little more tricky up here is if it comes down and then runs lower, right? That's the only time it gets more difficult. And when that happens, what you want to think about, if it does something like that, right, and runs lower, is look left, find that little low there, grab that trend line, right, and then short that. Okay, well, that's obviously a little more. It's a little more advanced, right? But it's the same idea. It's the we just can't sell too aggressively into that first try, right? They have to try once. Right? They got to try twice. If it happens to be that type of variation, right, we know exactly where we're looking to get short. All right? So I definitely want to get short off of these highs. I just got to wait for the 1, the 2, give me some resistance, right, that I can work with here. And again, it doesn't matter if it pulls back now. It doesn't matter if it goes higher here now. It really doesn't matter to me as long as, I shouldn't say this, as long as they don't pull back and blast. Right? Because if they pull back and blast, what is that? That's a 1, 2, 3 breakout, basically. Right? Right now, we have a very strong move higher here. So if I want to be a buyer on this, the buyers have to hold this pullback and really run. If they can do that, let me just get rid of that here for a second. If they can do that, they can hold the pullback and really blast higher here. First of all, where do we think they're going? Well, they get a 55 big round number. 55 big round number overhead is where I would expect those buyers to be going, right? There's a round number there, right overhead, which is completely doable, right? We're at 53 3/4 right now, right? So you could easily see, $1.25? That's easy on a market like oil on a Friday because it'll probably be a little bit lower volume. So 1, 2, 3. And again, I'd love to buy that pullback. How would I buy that pullback, by the way? Right? What do you think is the safest way to buy that pullback? The safest way to buy this pullback is going to be to get a nice deep pullback below the moving average and then let the bears dig their own grave. Let them try once, let them try twice. Honestly, I don't expect that setup tomorrow, but that is, if we see it, it's one of those situations where if it looks like a duck, sounds like a duck, it's going to probably act like a duck, right? So again, the key is going to be we get a relatively sharp pullback. That sharp pullback will have the bears drooling over this move going lower. The problem is, though, if I want to buy up here, there's the risk-reward ratio stinks, right? It stinks. There's not a lot of reward left up here. It's not considered to be a very high probability trade because you got very little space overhead and all that open space below, and it's been a weekly range-bound market. So I want to buy low as I can go, but I got to respect those bears trying to get short. This is a little more advanced tactic, as you can see, right? You got to get underneath that channel, let those bears dig their heels in, right? And then hit them right when you see that big, fat, juicy candle. That's going to make all the bears have to change their pants, and we can rip this thing higher for a retest of the high. That would be how to buy the pullback here. That's not going to be easy. It won't be. It'll probably be a bloody mess. So you have to really pay attention to the price action. And of course, we'll do it together every morning in the trade room, don't forget. But if we hold, we go, right? We then update the chart. 1, 2, find that new channel, and then I can buy that pullback, right? Now remember, these 1, 2, 3 breakouts. And I know it seems like, well, why is this a 1, 2, 3 breakout? No, it's not. It's not. This is just simply a rotation off the low. Now that we're above the high of that range now on strength, now you got to prove to me, right? Prove to me, buyers, you don't take your ball and go home here and we come back down in, right? But if you prove to us and you hold that pullback up there, fine. I'm just not going to buy that pullback. No way, right? No way. Just like I wouldn't buy that pullback, right? Or that one, right? I won't buy this one either. So the reality is wait for the proof, wait for that 1, 2, 3, and then mark the high, mark the low. First test is the best test. And remember, on a Fridays are one of those days where you can leave that little piece of the puzzle. Just what I would not recommend, though, is if you're on one contract, remember, it's a 1-to-1 risk-reward ratio. We're not trying to go for a home run on everything tomorrow, but if you got if you got 3 or 4 contracts you're trading with on each trade right now, leaving one of them to run up to that 55 wouldn't be a bad idea up there. But this is a spot where you're going to definitely want to make sure your risk and reward are balanced and grab that first target, because sometimes when you get these 1, 2, 3 breakouts like this, you'll get that beautiful, and again, you'll get that failure into pullback combination, right? You'll get that combination set up off of that low, but sometimes all it does is just go back and double top and then come right back down again. So there's no guarantee it's going to keep on going forever. So the point I want to make here is just remember, be disciplined with your trade management up there. Don't, I wanted to tell you guys earlier, you can leave those runners, but not if you're on a 1 contract position or really even a 2 contract position. Those big runners are left, right, for your 3rd or 4th contract. And again, don't forget, I talk all about trade management. I talk about entry techniques. Everything is covered in a lot of detail in that free trading course. I want to make sure you guys are successful with this information every night. So grab the free course linked up in the upper right-hand corner. Or like I always say, if you want to come out and join me every day in the trade room, I'll put the link for you guys in the description of this YouTube video, and grab that link and get registered there. All right? So that's how we're trading it, right, as it's going higher. Now, we talked about as it goes lower, right? As it goes lower, I want, right, 1, 2, ideally get those trend lines, right, and back up there. I talked about how sharp move lower, 1 try for the bears, 2 try for the bears, trap low for the bulls. Again, does that make sense, right? The difference there? So if we pull back and we go 1, lower, low, 2, this is not a bull. This is definitely not what I want to be seeing to be a buyer, right? I want to mark that low, mark that high, right? Mark that high, and there's your sweet spot right in there. Right? That's your nested for the short, right? It's very different than sliding lower, 1, 2, right? There's no lower lows there to work with. That's how you know the difference between I want to buy it or I want to sell it. I know it's more advanced, but I've got faith that if you come here and do this with me every evening, you'll pick this up pretty quickly like a lot of my clients do with us in the trade room. One thing you want to think about too is if the market does just collapse, right, as we go lower, if we do end up running back down into that range, that creates that bear bias into a trading range. Wait for the pop, wait for the buyers to buy the pullback, and we'll, again, selling those pops, right, above the top of that trading range, just like we do selling those pops, right, above the trading range, right? So that's what we're looking for as we go. One thing that would be pretty interesting, though, is because of the pendulum swing, and we know the bears are going to be hunting for a retest of that low, let's say the market, for example, pulls back, jumps off the moving average and runs. That is a great time to grab that low, grab that high, and get that pullback off the high of that channel. That's a very high probability setup as long as we're not trading into that low. Let's say, for example, we do just go 1, 2, and run, and the market really takes off. What's the problem? You're selling too low. What's the solution? A trap high, right? So it's the same idea we had on the S&P earlier, right? So if the market rolls over here, as long as we've got a nice strong turn in direction, a lot like the S&P, right? Remember the S&P? The S&P, it kind of looks like this, right? Where you got that 1, 2 down, grab that low, grab that high, right? Back above, buyer failure. That's pretty much all the S&P's plan is, right? But you can kind of see how we don't chase the market lower. We wait for the pop. If we can get above the range, wonderful. If it just runs and goes and really tumbles, then we know, okay, we're not going to be able to get a deep pullback like that. Does that make sense? Right? If the market just takes off the downside, you're not going to get this pullback, right? You're not going to get that. And if you did get that pullback, you wouldn't want it because it'd be so bullish. You know what I mean? All right, I'm going into a lot of detail right now. We'll fill in the blanks tomorrow morning in the trade room. But now you get a pretty good plan, though, pretty good idea of kind of how I'll be playing this tomorrow, right, on this OPEX Friday. Man, oh man, lot to cover here right now. We get a few minutes here to wrap things up here on the gold. Gold is the old variable for tomorrow. Gold's the wild card as we go into OPEX Friday. As you can see here, the range keeps acting as a magnet, right? This range, we get the wide range, right? We get the pony range, the Shetland range, as we've been talking about. I love that joke. I might use it again next week, too, if we see it again. I'm kidding with you, obviously. The range, of course, right? The range keeps on acting like a magnet. You can see that over and over again. The sellers, I'll tell you, it hasn't been the prettiest thing in the world. I'm assuming that's because of this Biden plan, right? But they keep on shorting the pops, right? They keep on shorting the pops here. Great example, once again, of we go up, buyers try once, buyers try twice, and back down we go, right? So you can definitely keep seeing these patterns over and over again. So we're going to keep on shorting the pops. And I'll tell you right now, the buyers are really stuck. The buyers, you would assume right now, are very much trapped, right, off these highs. Anyone who bought these pullbacks up here, they're really trapped right now. So if this market starts to run lower, this could get really good here for the bears. Now, with this potential, COVID relief plan, $2 trillion relief plan, it is difficult to see the market going lower, right? I would assume the market on gold will go higher if they decide to pump $2 trillion of cash into the U.S. economy. I can't imagine that's going to make gold go down, but, I stopped thinking so much a long time ago, right? I try not to think so much. I try to trade the chart. I trade the pattern. I trade momentum. So I'd be lying to you right now if I said I knew exactly how this market will react once this announcement is made, potentially here in a few minutes here. On this video. So range acts as a magnet. Now I mentioned in the introduction, we have this trend line in the way. And so obviously if the market runs higher, this trend line is going to be a pain in the butt. I like this area overhead, right? I like this area up overhead. My challenge though is this trend line. So we know from previous lessons this week, we know from this video this tonight, here's the range. I've got my areas of resistance I want to sell at, my areas of support I want to buy at. If I get this thing to pop higher here, what's my concern? Yeah, I'm selling high, but if I was to, for example, if we get that trend line there, if we go popping higher here and I was to look for a buyer failure pattern to sell in, I could be walking into a big trap here, literally and figuratively, for those bears, right? So that could really sting. What I'd like to do is, if we do get that pop, right, going higher, is I'd like to get, because this will be relatively bullish, I'd like to get the buyers trying once, but I'd like to get underneath this trend line and use that trend line. That trend line, like I said in the introduction, can be your best friend or your worst enemy. So we want to make sure we get, even if we pop up, we want to make sure we get underneath it and then short this thing back down again. Now, at the same time here comes the open now in Asia. We'll see if we get any. Here comes the 6 o'clock open right now as I'm recording this. Always fun to be recording this right into the open when you get a $2 trillion stimulus plan. It's like let's make this a little bit more unpredictable for this video right now. All right. So anyways, now if the market jumps higher here, can I buy this market? That'd be a good thing to be ready for tomorrow, right? Because, again, potentially this stimulus plan coming out. Now, what you want to remember is there's a big range up here. You can't see it very well. There's a big range up there, right? 1879, we'll call it 1880, right? That range overhead. We have to assume that's going to be an easy magnet along with the 1900, JJ. Where were you on this one, bro? 1900 is that big round number. So these are going to be some easy objectives if we do get that breakout. Now, the breakout, what you got to be careful with is if we just see a strong move higher, it's not going to be enough to qualify the breakout. Remember, the 1, 2, 3 breakout has to get above the range. Okay, this is not a 1, 2, 3 breakout. It's a nice strong move, but they have to hold that pullback, right? So strong move up, hold that pullback, and then go. Wonderful. Mark that high, mark that low. I'm not going to buy the first pullback, but I'll gladly buy the first test off the low of that new hidden channel, right? I don't want anything to do with that first pullback, right? You want a good example why? Look right there, right? That's why I don't want that pullback. I don't care how strong that move is, right? Lots of strong moves on ranges, okay? But I'm not going to buy that first pullback. You're more than welcome to if you want, but you might want to do that on a very small position. So strong move up. Right, 1, 2, 3 jump. I would also, don't be surprised if the market just rips higher here. Now, if it races higher here, right, and you know what I mean. What'll happen is it'll be bull. There'll be a red candle, and buyers will come right back in, right, and start ripping it higher. When you see that type of move, right, that blasts up through this trend line. Right? It's gone. This thing's gone. When it starts to rip like that, that's exactly when you look for shallow pullback, higher high, and trap low. I know this is not easy. Believe me, these are probably one of the most difficult types of markets to trade. When the market just rips higher and it won't pull back, but it's actually a good thing because it's setting up for a nice trap low. Find that shallow pullback and then get that trap. Remember, strong move up, shallow pullback is the FOMO pullback. Higher high in price, right? And then trap low. Again, you don't know how far that move will go, so make sure you take your 1-to-1 risk to reward, move that stop to point of entry, get rid of all the risk, and see how far it'll go. Again, it's a Friday. That doesn't mean everything will be a home run, but if we can get into a good position, remove our risk, get some separation from the entry price, we should be able to hopefully, right, get some low volume moves, right, on a Friday. Again, I talked about the short already. Right, so as we pop up, one try is good, but again, you want to get underneath that trend line and use that trend line here. One of the interesting things that you want to keep in mind for tomorrow, which is relatively likely, to be honest with you, if we go back into the range here, okay, don't forget that trend line up there. All right, don't forget where that trend line is, because what's going to happen is there'll be a resistance area here. It's almost a certainty we're going to get that little pop up into that trend line, and that's exactly what buyers are going to have a hard time resisting. They're going to see that trap, that breakout. I'm going to wait for those buyers to come back in. This is not a bull market. It is not a trending market. It's a range-bound market. So what do? We wait for the pops. We wait for the pullbacks. We wait for the buyers, right, to commit. And we target literally buying right where it hurts, right where those buyers go. Uncle, right, where the buyers start getting out of their long positions. So again, watch that. Watch that trend line up overhead. If it really sits and goes sideways for a while, we may have a hard time getting that trend line. So obviously there will be some nuance to that here tomorrow. Can I take this thing short as we go lower? If we are going to go lower, where's the objective? The objective is down around that 1820 area. So my concern is going to be if I get a 1 strong move down, 2 pull back, and a 3 break down, what's my problem down here? My problem is location. It's not momentum, right? It's location. So what do we do in that scenario? I'll do the same thing, but I'm looking for a trap. Right? Traps are your best friend whenever you've got momentum on your side, which is exactly what this will be. It'll be a very strong bear market, but we just don't know how far it's going to go. So again, you get that 1, 2, 3 move. Again, not going to sell the first pullback, right? That's suicide, like that one, right? Strong move down. Do we sell that pullback? No, right? It's inside the range. We wait for that 1, 2, 3. That says, for whatever reason, all the bears are hunting for that low, and then we go, okay, we don't want to sell into the low down here, so we sell high, and we try to get that little trap, right, because of that low. All right, so as the market rolls lower, we're running, and just like I think it was, the S&P or the oil, if we do end up down into these lows here, how do we buy it? We can be patient, right? Think about this pattern, right, where they go up, right? Buyers try once, buyers try twice. Little trapola, right, off that high. Beautiful setup. Same thing down here. Same thing, but the opposite side. Momentum is the problem, right? Location's great. Risk reward is great. I can risk small for a big old reward. Risk reward is great. Momentum is the problem. So give the bears the benefit of the doubt. Let them try once. Let them try twice. Draw the trend line as long as that trend line isn't too steep, right? Find your trap. The trap is the ideal, right? The trap is the ideal. One of my favorites we've seen a lot lately is that one kind of grinds up, right? We draw that trend line. So you can see, again, lots of variations of that, right, of that setup. All you're doing is you're waiting for the bears to kind of wrap that rope around their neck, let them dig themselves that hole, and then once you get that nice juicy signal candle off that support level, you know where those stops are. They're hanging out right above that high, and then pendulum swings, right? Your key target, of course, is the 1-to-1. Second target off at the top of that range. Third target runner, right? The happy hour runner, the one you're checking on your phone, right, is all the way up at those highs. All right, some definite excitement for tomorrow. My only concern is what will happen overnight with this COVID relief plan. How much volume will we get in OPEX? Again, OPEX is oftentimes one of the more challenging days of the month for gold, just because of all the portfolio management that's going on. Of course, gold is a hedge. So again, early in, early out tomorrow morning, 8 o'clock Eastern time every day in our trade room. Don't forget to come out and join us every morning at the opening bell. You can easily register as a new member on our website. I'll put a link in the description of this YouTube video. Grab that link, get registered, and I'll see you in the trade room. Don't be afraid to call the office if you have any questions. I always got live support on the left, live support on the right. And that'll do it for us here tonight, guys. Thank you so much for sticking around on a Thursday afternoon, getting prepped up for OPEX Friday. Have a fantastic day tomorrow. If I don't see you in the trade room, we'll see you guys not Monday, because Monday, of course, is Martin Luther King Jr. holiday weekend. So enjoy your day off on Monday. If you are trading on Monday morning, be very, very careful. It is a bank holiday. When the banks are closed, the kids are out of school. If there's a parade going down Main Street, volume will be very low, and that means setups are not going to be as reliable. So careful if you trade on Monday. I will see you guys back here on Tuesday evening for the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other. Stay happy, stay healthy, and we'll see you guys next time. Adios, amigos. Bye-bye for now.